When the market is oscillating right near the T line, it pretty much tells you what's happening as far as investor sentiment. But it's not positive, it's not negative, it's just kind of moving sideways. And it doesn't matter whether the moving sideways is slightly upward, slightly downward, or absolutely flat. It just basically tells you there's nothing major going on that is telling you there's a strong trend one way or the other. And the nature of each candlestick formation tells you what decisiveness there is. As you can see in the NASDAQ today, it traded down but came back up above the T line, but did it with a very indecisive candle, another doji. So there's nothing telling you there's any major change of investor sentiment based upon the lack of a decisive candlestick signal below the T line. So all you can assume is that the uptrend remains in progress, albeit very slow, until you see a candlestick signal and a close below the T line. How does this affect finding the best trades out there? Obviously, with 10,000 trading entities, using very simple scanning techniques, candlestick charts allow you to see where the strong buying and where the strong selling is coming into. And this has been demonstrated, especially in the gold sector, as being a strong sector. We can see the scoop pattern, flat handle, scoop, and what do we expect out of a scoop pattern? A slingshot effect to the upside. What's our upside slingshot effect showing us? They can't close below the 50, and they're not even closing below the T line. You've got kind of a slow curve with the potential of breaking out. This is a lot more upside. So at least we know stocks in that sector, such as Gold, GOLD, have the same formula, the same chart pattern. Flat handle, scoop, slingshot effect to the upside. At least it allows a candlestick investor to visually analyze which sectors are acting the strongest. And the charts also demonstrate which sectors are the weakest, as we can see in the retail stocks. Macy's continuing to trade below the T line without coming back up above the T line. Very simple rule. You just stay short until you see a buy signal and a close above the T line, which allows the candlestick investor to kind of anticipate where the next target is if you're trying to anticipate how much your percentage return will be on a trade. You can see the little wedge formation in Pier 1, then the breakdown. You're still below the T line. Where was the next likely target? Probably coming down here to the 50-day moving average. When it gets there, our analytical tools are very easy to identify. We're going to be in the oversold area. We watch to see if that's where the buying comes in. The graphics of candlestick analysis just merely indicate what's happening with investor sentiment with extreme clarity. That'll be it. We'll see you in the chat rooms.